Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Lodgify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Good morning.
Happy Monday.
Best day of the week. Will's had more coffee than me this morning.
Yes, sir. How are we doing? It's so good to see your guys' beautiful faces this amazing Monday morning. Jamie Lane, welcome back to the show. We've missed you as a guest host, so catch us up. What's going on in your world? How's Jamie's lane change going? How's life? How's Air DNA? Catch us up. Give us a scoop.
All good. February bookings have been great for North Georgia short-term rentals. Loving winter break. We had kids off last week, and they did camp and played lots of basketball, hanging out.
On the right team this for the basketball?
His team won their first game on Saturday. Him playing for the right team. Yeah, so it was a big day.
There we go. Glad that got fixed. And then Brandy, we see Mia. She's
getting into place.
The star of the show.
Yeah, she's to supervise from her perch.
She's a ham.
100%.
She is a ham. She's a chunky girl.
For the listeners, you have to watch the video version to see Mia. She's the highlight of the episode.
She's the star.
Yeah. Golden, how was your weekend?
Good. Went fishing with the boys and caught a few bass. So
nice.
Yeah, getting out in nature, it feels good.
Nature. I love it. I also went out in nature on a second date from the Hinge girl. So third date coming up this Thursday. Things are moving good.
Wow.
Feeling good weekend. And the sun, like the weather this weekend, yesterday, I got a little bit of a tan line with my sunglasses. It was 63 degrees here in Colorado, which is chef's kiss, phenomenal. So yeah, cannot complain about how this weekend was. Living on the good vibes,
Quick shout out to Kraus for crushing an ultra marathon this weekend.
Yeah.
And Gotti pulled him along and they finished a 50K. So
it's so crazy to me, that number. Like, just
yeah, no thanks.
I patted myself on the back and I'm like, you did a 5K. I'm like,
for listeners, David Kraus from Rent Responsibly, to give some context for those who may not know. But David and Gotti at Guesty, David Kraus with Rent Responsibly, crushing it. So I think I'm going to join him next year. Dave pinged me on Instagram, so maybe we get the whole crew.
No.
Any other David can join, but this Michael will not be doing that. No thanks.
Dang it! All right,
I'll do it with you, Will.
There we go, Jamie. Let's go. I got one person on the bandwagon.
Money market. I don't believe it.
Clip it. I love it. Well, before we get into the meat of the episode, and speaking of regulations and Rent Responsibly, one of our topics today is going to be in the regulatory sector, but we have to obviously break down why regulations are so important. And the main causes, as Michael has said on the show, for regulatory issues for short-term rentals is usually involved around noise, trash, and of course, parking. So the way you can avoid that and be a good neighbor is to get Fido. If you go to getfido.com and tell them that you heard about Fido on Good Morning Hospitality, they're going to take great care of you. And if you're already on a trash or bin to curb service provider and you move over to Fido, they're going to give you $50 per property that you move over. That's a ton of cash in your pocket, as we are also about to share the ton of cash that's in Bookings, Expedia's, and Airbnb's pocket right now after their quarterly earnings. So without further ado, go to getfido.com once more and tell them you heard us or heard about them on Good Morning Hospitality. We are back to the episode, and let's kick off with the amazing quarter that all these OTAs had. Jamie, do you want to kick us off with a quick highlight and summary of what we're about to cover?
Yeah. So as you sort of previewed, it was a great quarter, really across the board. I think there's always worry coming into the year that bookings were going to be down or flat or weak. And what we saw was growth really accelerate throughout the year and set us up, I think, for an amazing 2025. Booking really led the group. Overall bookings up 13% in Q4. Alternative accommodations up 19%. So really just crushed the quarter. 19% growth for alternative accommodations, like a very healthy business. And they said their homes bookings, which they call out as roughly 2/3 of Airbnbs. So we think of alternative accommodations for Booking.com as typically a pretty small share. But in 2/3, Airbnb had 11 million bookings. That's 74 million for Booking.com. So they are a growing player in the space. And when they're growing 19% and we're calling out that that's beating Airbnb, like Airbnb full quarter was up 12% for nights, booking values up 13%. Like they didn't have a bad quarter either. And that was an acceleration for them from Q3 into Q4. Everyone seemed to do better in Q4. And there were some tailwinds. One was the sort of lead up to the election. Bookings were a bit down. People were sort of wondering who was going to win. There was also the year-over-year comps with the attack in Gaza, war in Gaza that started in Q4 last year. And then sort of rounding up was Expedia. Overall nights booked up 12%. They called out hotel bookings up 14%, lodging bookings up 12%. And you sort of do the math, that put in Vrbo at around 7% growth for booking value. So all in all, and we were talking about declines for Vrbo last year with their platform migration, 7% growth and is pretty stout. And I'll put all that in context for what U.S. hotels did in Q4, up demand side up 0.5%. So when we think about the alternative accommodation industry, short-term rentals really outpacing both U.S. hotels and the global sort of lodging industry.
Yeah, I think there's been a little bit of a narrative from the hotel lobby that and maybe it's just our echo chamber of LinkedIn, but it's people are going back to hotels, short-term rentals are falling out of favor, blah, blah, blah. And I don't really think that that's the case. Again, this is like a pie that there's space for everyone in the pie, but the pie is definitely getting bigger and short-term rentals seem to be still in demand, thankfully.
Yeah, and where there is that narrative, and maybe you see it in the type of markets you're in, Brandy, but when we look at sort of 2025 or 2024 growth, like hotel demand in urban areas was up 2%. Short-term rental demand in urban areas was down by 2%. Yeah. So we are seeing, and in that sort of urban core, hotels sort of take back share and really fight back. A decent part of it is regulation. We're seeing, and we saw the impact in New York. We're seeing the impact in other cities. It's definitely there.
Mm-hmm.
Yeah. With all this growth, though, the funny thing is that, booking ADR in general didn't grow that much. It, gained 2% on Booking.com side, 1% on Airbnb's. So a good sign that prices aren't being discounted, which is good. I think we're all holding steady on ADR or RevPAR, but then also it's not as Michael likes to say, being price gouged, where people are just getting on the platform and then listing at an insanely high price and coming up with, some obscure number for their nightly rate that doesn't kind of earn or yield to that nightly rate. So I think that's strong. Like, it's not the biggest growth, but I think the numbers are showcasing good supply growth, or at least good booking growth. So it's overall like just really positive to see that we're not like at least discounting with the OTAs making this much money, and then the operators are having to lose out on that situation with discounts.
Yeah, Jamie, correct me if I'm wrong, but a lot of this is due to supply growth. It's not a massive demand growth. There is some demand growth, but supply growth is outpacing it. Well, what I might be worried about in the future that you can maybe supply some data for is supply grows to the point that demand isn't keeping up. Then ADRs start to plummet. And as ADRs start to plummet, supply starts to shed. And then we kind of get back to an equilibrium. But, Airbnb particularly has pushed supply so much. I am concerned that it's great for the OTAs. OTAs are crushing it, but I don't know how great it is for the broader ecosystem.
Well, and let's look at Booking.com, because they broke out both supply growth and nights growth. So alternative accommodation listing growth for Booking.com was only up 8% in Q4. It was up around 10% for the quarter. And with 19% growth in nights, and bookings are well outpacing demand growth. On the Airbnb side, Airbnb stopped reporting overall supply growth, but I've got it. I can see that they're up on nights about 12%, or on listings up about 12%. Nights were up about 12%. So really healthy, both supply and demand growth right in line. And we see in the US, occupancy was flat over the past year. So we really don't see supply outpacing demand anymore. They've roughly now come in line. And then, we talked about ADR growth. Airbnb sort of disclosed North America ADRs up 3% in the quarter. And that's something that we've been seeing across our data too, and in general, we're seeing overall in the US about 2 to 3% ADR growth. And I recently did a survey talking with some of the larger property managers in the space, sort of getting a sense of what they were seeing in terms of ADR growth. And most of them were telling me they're seeing flat to declining ADRs. And there is this sort of narrative that you see with some of the larger property managers that are sort of over-indexed into some of the bigger vacation rental markets. And that is still where we see some of the weakness in terms of demand trends, some of the lowest demand growth. Actually, we're seeing some supply declines in some of these areas too, as sort of hosts pull out. But overall, we're still seeing, as an industry, about 2 to 3%. So it really does vary based on the market you're in, and really some of the strategies. In talking with them, some of their strategies were, our homeowners want to be booked. They're comfortable that to get the occupancy level that they want, that they're willing to give up some rate. We're able to raise rates a lot over the past few years, and that's a strategy that they're comfortable with going into 2025.
Yeah, I know that there is this battle, I think, with some of the operators who are managing someone's actual home that they're more, they care more about, that they want to hold on to these rates. And I know that this has been a revenue manager's battle of trying to be we can't continue to satisfy that. But I was thinking about the supply kind of side of this, and how in more urban markets or slightly outside of urban markets, if you have a home or a building or condo or whatever, and you decide to take it off, there's a very easy long-term market that you can just kind of flip that over to in a lot of cases. But for these traditional vacation rental markets, if they're losing supply, that's just interesting to me. I would think that if an operator went out of business, that another operator would just swallow up that inventory, because what else do you do with those homes, if that's the main purpose of the home?
Yeah. Well, in the Great Recession, way back when, the market, home values, prices skyrocketed, recession hit, the first thing people sell is their second home. And so if you can't afford the mortgage of the second home because you're not making the income, then the house goes on the market. The house goes on the market. These second home markets are very susceptible to swings. And so the prices of those homes go down, which ultimately is good because then people can come back in and scoop them up for less and actually have that delta that it makes sense for it to be an investment property. But I think with rates as high, mortgage rates as high as they are, along with some of this, ADR or occupancy compression in destination markets, it creates a challenge for those who bought these properties as true investments.
I was also going to say, for Brandy's point, like, also that depends if the homeowner decides to keep their second home on a management platform or into a property management company after they go out, right? Like, I've known so many homeowners that got burnt with all these closures of property managers or urban operators, and they're like, you know what, screw it, I'm not putting this back on to the short-term rental market. I'm just going to hold on to it and rent it out to a tenant or do it myself long term. So yeah,
Snowbirds.
That's a really good. Yeah, snowbirds. One of the big takeaways though I got from Booking's earnings call, which I really liked, and is a theme I'm hearing obviously in the hospitality market through my other shows and just conversations I think we're all having with operators, is management and expense control, where Booking.com said that they kept their expenses in check with a total operating cost actually decreasing by 10% year over year in this quarter, leading to improved margins. So profitability is still becoming the most focused piece of the business. And that's like super good for the company. That's super good for the shareholders. And I'm hearing the same thing with operators. And I want to kind of ask the question in terms of, with, yes, like maybe ADR, like revenue might be going down or it'll be a little flat for operators. How many of you guys, or how many of you in the terms of like, are hearing this in the industry with people just focusing on profitability and operation efficiency? Obviously, I think we're all just starting to kind of put our head down and do less of the shiny things and more of the, oh my gosh, just actually add some meat to the bone here for ourselves as a company.
Yeah, I can speak to that pretty easily. I mean, but we've been, because I think after kind of that like high moment of the post-COVID ADR boom, and just, we've really had to take a look, I mean, in the last year and a half, 2 years, of like being really ruthless about what we're spending money on. But even then, like there's only so many things you can cut, right? Like the real solution to everything is revenue. So it is this interesting dance with like just everything being more expensive. You're getting that like annual subscription renewal, and you have this battle against a vendor who really needs to raise their prices to start to become profitable, going against an operator who is like, I will literally fight to the death before you raise this one penny. Like, I think there's going to be a lot of that, just because you're not seeing, I mean, just like we said, there's minimal to no ADR growth, and the costs are, I would say, well outpacing that from an operator side. And I'm sure there's markets maybe where they're not running into that, but I would be confident in saying it's most operators are dealing with that.
Yeah.
I'm also hearing,
I don't know. Sorry. I don't know a single founder right now that's not focusing on profitability. And I knew a lot of founders 5-6 years ago that were not. And so it's the access of capital right now into the space. It's just not really there. There's not a ton of venture funding into early stages of startups, and certainly not on the operator side, and still in rare occasion on the vendor side.
Well, I was going to say, I'm hearing similar things, but I think the tech vendor side of the industry is under more and more scrutiny now more than ever, due to this side of like everyone just signed up for every type of tool and product there was. And the tools and products, let's be honest, are not at the point of an Apple or an Amazon or even an Airbnb when it comes to like actual product design and functionality in our industry. With the amount of cash that's come into this industry, something I'm very passionate about is that it's very far behind. I 100% believe that hospitality tech is going to be a struggle. And I think operators are starting to see like, hey, I'm going to put my PMS on the chopping block more often than not, because with certain, products like CRMs and channel management tools, you can almost cut out your PMS now. And so
I think it is very much the opposite. I think you can start to cut out a lot of your other products because your PMS is going to do most of that for you, at least to a standard that you're willing to accept.
Get a breezeway and a good CRM and a channel manager, and you can basically get rid of the PMS.
Yeah, but then you look at your cost of all of those things. I don't know. As someone with like 800 plus listings, I don't think I would be just getting rid of the brain of the middle of the business. So
it's maybe not now, but it's happening. I'm talking to a lot of operators who are literally considering this as a huge shift in the tech landscape for hospitality, and not just on the short-term rental side, on the hotel side. Yeah, sorry, Paul. It is a bold statement, but I'm just saying, like, it's almost to the point of yeah, there's a lot. Anyways, so I'll just hold my tongue from that point on.
Listen, that's a prediction.
Future slick talk.
It's a prediction you have for the next year. We'll see. We'll add this to the 2025 predictions, and we'll see what happens next year.
I think it's possible for an AI platform to come in and service a lot of the PMS functions, but I don't know of one yet that's there.
Well, Jamie, as AirDNA has acquired a PMS, what do you think? Do you guys feel the same? I'm gonna assume not.
I'm in the Brandy camp of and that PMSs are going to ingrain themselves more in, and they're being more and more, I think, built around all the things that you need. And like, yeah, and Breezeway is great, but it integrates with every single PMS, and it takes over a lot of that functionality. And yeah, like a lot of PMSs are trying to build in that Breezeway type functionality into their system. And as more and more do it, and it makes operations much more efficient. So they're seeing all the things you need. Like, I don't think most operators want to integrate into their own channel manager. Like they, they want it simple. They want it to happen seamlessly, and and just going back to expenses. I loved the comments from Booking.com and sort of Glenn on where they're seeing the efficiencies now. Is like, you look at their expense growth and you look at their booking growth, and they're starting to decouple. And they're calling out that a lot of that efficiency gained is because of AI, that you can have more and more efficiency per worker. So they're not reducing their workforce, and they talked about some reductions, but primarily it's that they can do more with less, and that they're going to be able to continue to grow, continue to accelerate. And with the efficiency they're getting per worker, they're going to be able to not grow expenses at the same rate.
Yeah, which I think everyone should take note on. Like, we should all be trying to move in this direction.
It's huge and hard to do at a company as big as they are.
100%.
In other news on Airbnb's earnings, there's 2 points that kind of jumped out to me that they're two in the same in some regard, but Airbnb plans to invest between 200 and 250 million in 2025 to launch new businesses and offerings. And simultaneously, Chesky stated that he wants to become the Amazon of travel. I want to address that one first and then move into what the new business lines could be. But becoming the Amazon of travel sounds like they want to become more like Booking and Expedia, because they are pretty much the Amazon of travel. You want a flight? Great. You want a hotel? Great. You want a short-term rental? Great. You want a cruise or an experience? Great. So congrats. You have officially stated that you want to become an OTA. Unless you're going to sell goods like Amazon, then you're an OTA. And then the $200 million investment. We saw Airbnb drop $200 million on an AI company, and we have seen no news in 12 months on it. $200 million is literally interest on Airbnb's cash on hand. So it is absolutely $0 in their coffers. And the majority of, I've seen the Airbnb statements before coming out of COVID when all the house parties were a problem. Airbnb Chesky vowed to invest $100 million to solve the house party issue. And, that was a headline, and never saw anything else kind of on it again. So are they going to invest $200 million? Absolutely. Their headcount is more than $200 million, I would presume. So they are investing it each and every day. What the new lines of businesses are, obviously they're not comfortable sharing that publicly yet. Otherwise they would have. But
well, you just said it, Michael. They're trying to become an OTA, so adding.
But it would
flights,
point towards. But it would certainly point towards flights, maybe more on the hotels, integrating the Hotel Tonight acquisition, which I love that acquisition. I love Hotel Tonight, but it's kind of feels like to me it's just been pushed over to the side. So
yeah, and Chesky said on the call, we're getting it in May. They're going to relaunch experiences. They're going to put that money towards bringing it front and center on the app and towards marketing. They're like, maybe we had a great product before, we just didn't market it right. So I suspect a lot of that money is going to go towards making sure everyone in the world knows that Airbnb has experiences, and they're not just for when you're traveling, but for when you're in your home market, when you're on a business trip, when you're anywhere. And I think that's been made very clear. And we're what now, 4 months away from the big release.
Will not fail this time.
Re-release.
Lots of money at it.
For the fourth time in a row.
Yeah, I mean, personally, I've had great times on doing like Airbnb experiences. You usually get like a smaller tour. It can be like just you or maybe one or two other people, or, you get something that just feels less touristy, even though you're doing something very touristy.
Well, wasn't TripAdvisor kind of being marketed for sale? TripAdvisor owns Viator. They're kind of the pseudo Amazon already. There could be an acquisition or integration there, but I'd be a little skeptical on that because Airbnb's brand is so strong and TripAdvisor's brand has been so not lately.
Yeah.
So,
but
also,
and I will say though, internationally, like if you're traveling to almost any part of the world, people reckon that'll be like, top 10 on TripAdvisor. Like they'll have the little decal in any sort of shop or restaurant thing. So even if like as a company, they're not performing really well, the brand internationally does have that kind of recognition for being trusted.
It's got restaurants, it's got Vitors, the tours and experiences. I mean, maybe we're being Nostradamus over here again. This isn't even our predictions episode.
No, it's all good stuff. I think the experiences part definitely, I don't know. I feel like we're missing some stuff from the launch of Icons and the launch of all these other things that were making such big, headlines, where it's like, okay, like, and Brian Chesky's even mentioned on the AI front, like, why would we develop our own thing when there's so many good partnerships we can do first, right? Like, so integrations or connectivity with ChatGPT, or because I'm hearing more and more that they're becoming close buddies and whatnot. So just in the side of AI, it's interesting for that $200 million acquisition to then not roll out their own thing and start focusing on integrations, to then also, why would, I don't know, Airbnb was seeming to go the direction of owning the experiences through its Icons platform, but now it's going to focus on relaunching this for a third time just because they think they didn't market it that well the first time or two. So it's like, all right, let's see how that actually goes for you guys. But hopefully I'm rooting for their success, right? I want to use experiences. I want to see them grow and obviously be a more sustainable platform for consumers and overall like culture. But yeah, it will be interesting to see how they've shifted over the last year or so.
Anyone's thoughts on Amazon for travel?
I mean,
Booking.com, Expedia,
it's
Uber,
and also it's just Uber, throwing that one in there. It's just, I think you don't be the Amazon of some other industry. Be like, create your own. Also, like, to be the Amazon of something, you have to be in Amazon is so, those tentacles are in every industry. I don't think that is an easily replicable strategy. But just my opinion. We'll see.
It's so funny that, I've seen so many pitch decks through the years that we're the Airbnb of boats or backyard pools or, this, that, the other. And now Airbnb is saying we're the Amazon of travel. I mean, you guys are a massive publicly traded company. You don't have to compare yourself to Amazon.
But I would like to see, there's all this talk about they bought an AI company. Experiences is great. I understand that's a good, great revenue generating business, but like, what are they going to do with all that AI? I would be for all the talk. We'll see.
It was the creator of Siri. Like, how are you guys not doing more with that acquisition? That's like mind blowing to me. But anyways, I'm with you on that one, B. All right, Brandy, this one is perfect for you as we close out the episode. I know we're running a little bit over our 30-minute time, but New Orleans and Airbnb not happy with each other with regulatory lawsuits. So what's going on?
No. Excuse me. So like the rundown is obviously New Orleans is a big STR market. They have this, new strict wave of implementations coming in, like actually, restricting in certain areas, restricting the licenses. All that's about to start happening because it's going to be after Super Bowl and Mardi Gras, conveniently. And Airbnb is suing New Orleans. And this is not surprising. I think compared to like New York is like a behemoth. It is like its own mini empire. Fighting something in New York is very difficult. Fighting something in New Orleans is a little bit different. The city is not as organized or I think as powerful, and like there might be some room for negotiation and or wins, but it'll be something that's drawn out. I mean, they've been dragging out these lawsuits for years. So we'll see what happens. I'm in favor of some good regulation, but not something that is draconian and unenforceable. So we'll see. Stay tuned.
As long as you got a hotel license, then ban it all, right?
No, that is not my attitude about it. We do have some STR, it doesn't help this. I mean, it certainly helps operators if you have hotel permits, if everyone gets shut down, but so much of the city is reliant on tourism. You just look at Super Bowl that was just here. People are the short-term rental income is not insignificant. So,
well, it's already supply constrained as witnessed by the Super Bowl. I mean, if you can drop $2,000-$3,000 on a studio, then you are a supply constrained market. So that didn't happen in Scottsdale.
Exactly. So we'll see. That'll kind of be like an evolving story, and I'm sure I will vent about it on here at some point.
Brandy rent. Yeah. Well, it's just like Michael made the comment, but it's just so funny how the city does this after the Super Bowl, after Mardi Gras, and it's like, of course, they made their money.
Want that tax?
And so,
you want that tax revenue? That's crazy.
Yeah, it's wild. Jamie, any thoughts, comments, concerns from the ADNA side?
And it gets into the age-old debate on whether the government is there to enforce the laws or whether they can impose onto Airbnb to monitor every single host, every single property on whether or not their unit is legal to be on the platform. So it's, and I think they've got a good case on why the government should be monitoring. New Orleans is already very restrictive in terms of regulation. We've seen supply growth down over the years. I think they've got a good case.
But I think the other component to that is that when you're working with a city that doesn't have clear, none of the regulation is clear, it's difficult to get people to answer you. Just the permitting processes, licensing processes are kind of convoluted and drawn out. So it just doesn't help you be a good actor when it's difficult to interact with those governing or licensing bodies.
Typical government, not efficient, not effective, not timely, whatever. It's just classic story of time. Oh, this has been a fun episode. Shout out to Paul Manzi, who has been commenting in on the show. We love your comments during the live engagement of the podcast. For our listeners, you can go to goodmorninghospitality.com, sign up for our newsletter, and get on the GMH content train. And as I like to ask every week, anything exciting, anything fun coming up this week for anybody on the show? Jamie, what do you got coming up? I know you said you're coming to Denver in the next week or so hopefully I'll get to see you. No offense if you don't. I won't be hurt.
I'll be out in Denver. Just signed up to go out to VR Nation coming up in April, I think.
Nice.
So excited to go out to Austin for that. Be in Barcelona at the end of March. So yeah, got some fun travel coming up.
Right. Cool
Yeah.
places.
Nice.
Are you going to see Sarah from our Europe crew while you're in Barcelona?
Of course, it's to go out to their DNA office. So yeah.
There we go. Just making sure. Shout out to Sarah for crushing it on Europe with Leo. So we love their episodes. They had a fun episode last week with Simon Lehman as a guest host, breaking down the inner home to go deal. So very exciting. If you missed that episode, tune in. It's a good listen. How about you, Michael and Brandy? What's on the agenda this week?
I'm going to the Northeastern has like a satellite campus here, and they're having a global innovation summit this week. So go there and see if I learn anything new and exciting.
Love that. Golden.
Nice. Yeah. Nothing new over here. Same old. Head down. Plug it away.
Lovely. Well, same here. Grinding, pushing forward, moving the needle. Let's go. All right. So all our morning people, shout out to you for tuning in. Thank you for our live viewers. Make sure to sign up, do all the things. And of course, thank you to Fido for sponsoring this episode. We love working with you, and to avoid regulation and other issues in your area, be a good neighbor, getfido.com. And like always, we will see you guys all again next week.
Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Lodgify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.